I'm on board a 35 horsepower Massey Ferguson that was built in the 1970s, pretty much a vintage. And this speaks to my current location. We are at the Zimplow premises, where we're looking forward to a conversation with the Chief Executive, Vimbai Nyakujga. Of course, on the earnings review, we do detail the operations of entities. We also dig deep into their financials to ensure that you are furnished with first-hand information.
Equity Live presents the complete online interactive presentation solution. Hosting AGMs, media and analyst briefings has never been this simple, efficient and affordable. Communicate globally through a combination of high-definition video and your prepared multimedia presentation from any location of your choice. Interact with your invited participants from all over the world in question and answer sessions and voting sessions in real time on our safe, secure and affordable platform.
A mover of the Zimbabwean economy. Zimplow is a Zimbabwe Stock Exchange listed industrial concern involved in the manufacture and distribution of heavy equipment for industry, mining, construction and agricultural sectors. Having been in operation in Zimbabwe for over 85 years, Zimplow is a renowned marketer and distributing agent for several international brands including the Massey Ferguson, Voltra, Falcon and Caterpillar among others. Zimplow's farming divisions, Millibrand and Farmec produce a wide array of farming equipment including planters and cultivators, complemented with the expertise in animal traction technology. Through its city bolts and BASM units, the group distributes mining equipment and spares for an economy whose mining sector accounts for 65% of its foreign receipts. In the face of a power crisis that grips the region, Farmec provides generators and engines for use across industry, while its property arm Manica Road continues to generate value for the group. Zimplow has been on an expansion drive, snapping up Birmingham investments as well as Scanlink and Trentire as the group extends its operations into logistics. The CEO, Vimbai Nyakujga, sees titillating opportunities and is bullish of the firm's operations despite Zimbabwe's economic headwinds. On the cards is their half-year 2021 results. Sir, good day, and once again, thank you for welcoming us into your corporate home.
Thank you very much, Ibn. You're welcome any day.
Fantastic. To sort of get to the chase, this conversation, of course, is coming in shortly after the release of your half-year results for the half year ended the 30th of June 2021. Yes. Let's get into some of the nitty-gritties with regards to your performance. A strong set of performance that you did actually deliver given the harsh macroeconomic conditions thereat. To sort of delve now into the figures, the group there recording a 67% revenue growth to 1.66 billion Zimbabwean dollars over that particular period against the comparative period of 2020. What drove that very narrative?
Thank you once again, Ibn. So in terms of that narrative, obviously it was driven on two factors, the internal side and the external side. So in terms of the external side, I think we're coming out of a good rainfall season, which drove the agricultural side of our business, especially with the tobacco season, where we had volumes of tobacco delivered to the auction floors better than the previous year. In addition, we have seen the pandemic affecting the supply chain to the extent that we have seen prices of minerals and metals firming up, also driving the mining side of things as well. You would see most of our customers in the mining side, especially gold production, platinum side, they have been performing very well. They've been improving in their performance. So those external factors, they've contributed to our narrative or to the growth in volumes. But most importantly, the things that we've done to respond to that projection, which we saw coming as early as March 2020. You would notice that when COVID started coming through, or when we started feeling the effects of COVID, there was talk of effects on the supply chain, and we had to jump ahead of the gun and provide solutions or issues or do things that would make our supply chain flow smoothly. And those are the things that we have done. So we have had to push on capital allocation. We have had to prioritize those things that we knew would be affected by the supply chain gaps. On top of that, we deliver premium brands to our customers. And those premium brands, they on their own always sell, if you know what I mean. And with the belief that our customers have in our brands, if you look at Cat, if you look at Massey Ferguson, if you look at Perkins, they have really come on board to ensure that they push through the demand, or they meet their operational needs by the premium brands that we supply. So when I talk about premium brands, it's obviously the philosophy behind operating efficiencies, delivering performance, which our customers believe strongly. And that's what we try to give to our customers. More importantly, our people as well have been, I think the team at Zimplow has been fantastic in terms of driving this performance, especially during a pandemic. The efforts across the board have been phenomenal. I'm excited with the way the team has bought into the vision of growing this business, of dominating the markets that we operate, and therefore has driven the growth on our top line that we're seeing today.
Pretty much bog standard. Just perhaps as follow up to, excuse me, something that you did allude to in that statement there with regards to the strengthening prices of commodities across the board. To what extent is that a significant move to your operations down here?
So the strengthening of mineral pricing or metal prices has got an effect of encouraging the customers or the people that are in the sectors that we operate in or that we supply equipment in. And in that, it has got an effect of encouraging the flow of capital. We deal in capital goods. And it's not always every day that you want to buy a dozer or a 200 horsepower tractor. So whenever there is strength in these markets, people tend to have more disposable income to apply to capital expenditure. And that's what we've seen in particular. And on top of that, you will see that the confidence that people have been gaining, especially with also the things that our local economy or our government locally has been doing to sustain or to meet the external trading environment, have been phenomenal, and they have encouraged our local participants to deliver value or to see to it that we meet their demand in terms of capital equipment.
Fair enough. Now, you've got an aggregate of your revenue which went up by as high as 6 to 7% in inflation adjusted terms, ignoring or setting aside historical terms. Now, in as far as your bottom line is concerned, there was a significant jump in historical terms, which was not, however, matched by the increase in inflation adjusted terms. In fact, in inflation adjusted terms, there was a decline of right about over 15%. How do we account for the disparity there? Does that speak to the costs of production? How do we account for the disparity there?
So thanks for that question, Eben. I think that...
and also, as a point of clarity, you find that in this reporting season, it's actually a market-wide phenomenon.
Yes. So you would notice that in terms of our reporting, we have done the inflation adjusted, but in terms of the way we've looked at our business internally, we have looked at the volume performance. We have looked at the real performance, that is the US dollar or the hard currency performance. Yes, we have looked at the historical, we have looked at the inflation perspectives, but because of how we have been trading during this period, the US dollar numbers have become more critical because most of our transactions have been driven by what has been happening on the auction market, have been driven by the inflow that is increased in cash terms you would see that our mix compared to last year was significantly up in terms of US dollar transaction. And those US dollar transactions are recorded in our books in historical terms at an auction rate, which if you then apply a CPI, which is determined based on ZWO pricing, and we all know what the basis of ZWO pricing has been. It has not been consistent with the US dollar pricing. There have been some distortions along the way, which the government at some point in time have tried to address through an SI. So those kind of things, if you then look at the inflation adjusted and our real performance, our revenue in real performance terms, I would say they doubled. In fact, we had a 103% growth in revenue in US dollar terms compared to last year for the same period. In terms of profitability, yes, on the bottom line, we in inflation adjusted, we're talking about a 21% drop. But in terms of the real performance, we were 57% up in terms of profitability.
That's in US dollars.
That's in US dollars. So the US dollar performance takes or it immunizes, or it doesn't consider the distortions in currency, the exchange gains or losses, because we are talking about the same base currency. And as a trading business, our functional currency, I can safely say that our functional currency is more or less been on the US dollar side. But because we operate in an economy that is governed by certain macro or monetary policies, we have to comply. Hence why you see that even the auditors have been qualifying the IFRS, or the International Financial Reporting Standard based financial statement, which is at the inflation adjusted. So in terms of the performance that we have seen, from my perspective, it has been a good performance, supported by the volumes growth that we have reported across all the top three business units that we have got in Zimplow.
Would you be at liberty to perhaps spell out how much of your revenue actually or of your sales actually comes through as foreign currency denominated vis-a-vis the Zimbabwean dollar?
So during the period that is under review, we have seen more than 60% of our transactions being based in US dollar, or being driven by the auction rate.
That's
if I can put it that way.
Okay, that's a plus.
Yeah.
That's a plus. Now, of course, there would be the mouth-watering acquisitions that you have successfully completed, getting on board, of course, Scanlink Limited, as well as Tradco Zimbabwe. Can you shed light in terms of the significance of these very acquisitions to the group?
Thank you for that, Ibn. I'm very excited by the addition of Scanlink and Train Tire. As you can see, Scanlink, it does the Scania brand of trucks and buses and tippers as well in the mining for the mining sector. Train Tire is a Goodyear distributor. All of them are premium brands. It fits to our philosophy or the business model that we have got, the corporate strategy that we have got of distributing premium brands into the market. So on their own, I think when we looked at those businesses, we saw that there was potential on the businesses for them to grow on their own before we consider what we can do to take advantage of the synergies that exist between the businesses across the group. So on their own already, with the interventions that we have started making, we have seen growth. So that's number one in terms of that is number one in terms of the things that have driven us to do this acquisition or to complete this acquisition. Secondly, it offers that diversification that as a group, naturally we have been looking at trying to find balance in the different sectors that we operate. As we stand now, we can say we have got 7 operating business units, but in principle, when we look at the sectors that we operate, we are looking into 3 segments. And hence, Scanlink and Train Tire then dovetails into the businesses that we have been operating already. With Train Tire, with coming on with tires for the agri, with tires for the mining applications, it then supports our philosophy or our perspective or the reach that we want to achieve through a one-stop shop into the sectors that we've been operating into. On Scania as well, it brings in these tipper trucks which are suitable for long distance mining operation or for long distance infrastructure projects that we anticipate that they will grow. Already the government have been doing the right things to encourage growth or to encourage infrastructure development. So we are quite confident in terms of how this business will fit into the business model or the business verticals that we have been reaching into already. On top of that, you notice that we have been talking about these new businesses having their own ecosystem. Right. So that ecosystem provides us with additional strengths that can give us more momentum and reach into the sectors that we have been operating already. So I'm pretty excited with that completion of the acquisition.
Fair enough. Now let's talk about the Birmingham investments. Can you shed more light where that is concerned?
So this is a property which is strategically positioned, and I think in terms of where the way we've been operating, I've said we've got 7 operating business units, but we've got a real estate unit which we manage more or less as part of the group, and that real estate portfolio, it provides us with that base in which, in an environment like ours and for a business like ours, which is equipment distribution, we normally would like to have a good portfolio in terms of financing, in terms of balance sheet strength, and the leverage that comes from these properties, as well as the market reach. It's phenomenal, and it has been part of our business model that we always, if we find a property that or properties that give us the reach into the markets that we want to be in, we'll definitely go for those. And it's in a similar way that is the Birmingham property investment. Yeah.
Still dwelling on these acquisitions, what's been the sort of arrangement that you've had? Of course, a significant part of them have come through in agreement with Unifreight. What sort of arrangement have you had there? Some consideration for Birmingham coming in at 57 million Zimbabwean dollars. Can you throw some light, Rays, where that is concerned?
So in terms of that now, so Unifreight was a shareholder of that particular entity that owned that property, and as well as a 51% shareholder of Trent Tire. So in terms of Trent Tire's reach, that's where this whole transaction comes into play, or we complete the jigsaw, or where the teeth of the jigsaw fit into the picture. So in terms of that transaction with Trent Tire, it was basically a sale transaction whereby they sell their assets into Zimplow for consideration of shares. And in that particular, I think that is in essence the underlying link between Unifreight and Zimplow. And Unifreight is now a shareholder of Zimplow as a result of that.
Could that spell positives in terms of synergies between your line of business and that of Unifreight?
100%. So Unifreight, if you look at their fleet, they are into the logistics. They are the on the other end of the sector that we are reaching into through their fleet. And if you look at their fleet, most of them are Scania products. And as a result, having access to such kind of a relationship, a guaranteed market already for our products, it's a no-brainer. And because we can easily then provide the after sales, it's more or less a captive market for us.
Bog standard, I must say, and mouth-watering at that. Now, a cautionary statement was released over the past 7 days that you said that there is a material transaction that is taking place. I know perhaps you would be tight-lipped in terms of what you can spell out, but out of interest, would this be another acquisition as well?
It's too early to tell again. I think tight-lipped is the right word to utilize there. Yeah, but it's too early to comment on that.
Okay. I will hold on to my thoughts where that is concerned, but given the expansion that have been taking place, I will take a guess that perhaps that could translate to that. Now, given the recent acquisitions, does this spell a diversification strategy for the group?
So if you look at Zimplow, the way we have grown over the past 10 years, if I can, in fact, maybe more than 10 years, you would see that we have utilized both organic and mergers and acquisition. And our ultimate goal is to deliver value to our shareholders and our stakeholders. And it's still the same goal that we deliver value to our stakeholders. So in terms of our corporate strategy or our philosophy, we believe that the principles that we have outlined for ourselves to guide the way which we are to diversify, the way which we are to acquire, the way which we are to dispose of assets, it's guided by those firm principles that we have held or that we have created for ourselves to guide the future. So it's a systematic way in which we are going to look at our growth going forward. And I'll tell you, diversification will always be one of the objectives as part of our corporate strategy.
Now let's talk about the impact of COVID-19 on your operations, with various campaigns in as far as vaccinations are concerned taking place across the region. South Africa, even Zimbabwe. Zimbabwe is among the top countries on the continent in as far as vaccination campaigns are concerned. What's been the trickle-down effect to your operations with, of course, the relaxations with regards to certain COVID restrictions?
I think COVID-19 has been one of those terrible monsters or the elephants in the room, and surely it has affected our business. And this third wave is hit hard on the Zimplow group. I'll tell you, one loss is too many, and we lost one of our colleagues here due to COVID-19 complications. So it wasn't an easy period. When we hear of solutions that can help us to trade or to improve business conditions, we would definitely objectively look at those. And vaccination has been one of them, which we have objectively looked at, and we have looked at the pros and cons. And we believe that there are quite a number of benefits that come out of that to achieve herd immunity. All of us, we do not want to be cornered or to be restricted in moving, to be under lockdowns. That's not good for business. And hence, if we have got a solution, we will jump onto it. And I believe in terms of the actions that we have taken to educate, to give information to our staff, will yield results. And so far, we have seen the tremendous results of our staff taking up this vaccination program, and we believe by year end we would have achieved 100% vaccination across the board.
I'm still on COVID. Remember when we had the other conversation earlier on, that was for your full year results.
Yes.
Some vaccination campaigns were being rolled out, and we were still in that phase with a series of developments actually taking place. I want us to focus on your supply chains.
Yes.
There's been obviously a certain degree of recovery that has taken place, is there?
So in the first part of the year, in fact last year, we were better placed in terms of supply chains. Most of our OEMs still had a lot of stock on the floor.
Okay.
So we were able to draw down on those stocks. So this part, that's where I think the real effects of COVID have been seen.
Okay.
Through our supply chain. In fact, we have even seen freight charges going up, like tripling over this period. I remember someone mentioning that as early as February, we were paying around 4,000 for a container, but now we are talking north of 17,000 USD. So that's how for a container. So that's how the supply chains have been impacted. And you will see that with the firm mineral or metal pricing, we sell metals, we sell steel. The pricing definitely will not remain the same, and we have seen, especially on the Millibrand end, the steel prices, the steel pricing going up, and it has filtered through to our to our pricing models as well. In terms of our own demand management, we do product support. Sometimes you need to travel to the customer, to the mine. And that has been difficult to achieve because of these COVID protocols. Everyone had to guard against the infection rate, or to reduce to flatten the curve. Everyone was trying to achieve that objective, and in the process, it reduced our sales as well in terms of what we can achieve through product support. So those were some of the effects of COVID for sure, and supply chains have not been spared.
Now let's zero in on some of your business units. To start with Pharmac, in fact, across the board, most of your business segments actually did record recoveries that were, quite high. Pharmac, they coming in at a revenue growth of 119%, with volumes increasing 133% and 77% spread between the tractor as well as the farming implement volumes respectively. What was this the trickle down of a great agricultural season?
That is correct. I would say partly that is correct. Partly we have had a good agricultural season, and hence farmers were bound to focus on recapitalization or tooling up of their projects. Secondly, it is also due to the efforts by the board and management to ensure we've got the right products, given the supply chain disruption that I've mentioned. So the intensity of engagement, the demand management, the focusing and projection efforts that we've put to understand our customers' needs have paid fruit during this period as well, as we have been able to respond with the products that the farmers, not only on the farming end, also on the Millibrand end, on the Basem end, on the Powermac end, and Citybots end. We have made conscious effort to make sure that we have got enough resources, we have got enough capital, we have got what our customers require in order to meet their needs, given the good fundamentals that have been operating in the market, or that we have been obtaining in the market.
You mentioned requirements for the customers. Now, some of your inputs into production and what you actually push out to the customer is stuff that you import from beyond our borders. Now, the most recent statement released by the Monetary Policy Statement, or the deliberations from the Monetary Policy Committee, did indicate that there was a backlog of up to 175 million United States dollars for, in as far as allocations were concerned. How's been your experience in terms of sourcing for the much needed harder currency?
So first of all, I would say well done to the team that is managing our both macro and microeconomic policies, especially the monetary policy. So we have seen the auction market working for us, especially for the businesses that are under our wing, under our group. We have seen the auction market coming through, and it has really performed to a larger extent, but we have also seen some gaps here and there, of which I understand the government is working flatly to resolve some of those bottlenecks. But one thing that I will tell you, Eben, is that we have been operating in this environment. We wish our economy well. We wish our businesses well. And with our customers, we share a common understanding of how we trade in this environment, how we manage the risks that are obtaining in this environment. And I'm glad with the cooperation and the way in which everyone has put their hands on deck to ensure that we achieve that common vision of ensuring that we preserve our balance sheet, both on the customer's end, on the business end, and also from a government perspective.
But while that would, of course, be very much in the positive, how's been your experience given the vagaries playing out on the market?
So obviously the distortions in the market, they need a solution. They definitely need a solution. We can't continue on the path that we are on at the moment. And I'm quite aware that the people or the responsible authorities, they are looking into these factors with that much seriousness and intensity. And soon enough, I'm sure there will be solutions that will come to give or to provide us with a way forward.
Box standard. Now, most recently, the president of Zimbabwe, Mr. Edi Mnangagwa, did announce that government is targeting to reduce carbon emissions by up to 40% by the year 2050. What does this spell for Zimplow, considering you are distributors of equipment that, of course, would have that...
would consume diesels, fossil fuels and stuff like that.
Affirmative.
100%. So you would see that Zimplow, as I've mentioned, deals with premium brands. It deals with OEMs that are renowned, that are focused on performance, that are focused on efficiencies, that are focused on sustainability. That's the most important thing. And we share values, we share a common vision on that in terms of sustainability. And hence the call by the president, it is welcome. It is something that we surely welcome, because we are already working together with our OEMs to ensure that the products that are coming through, they achieve the standards of emissions required. I'll give you an example. If you look at the Massey Ferguson tractors that are coming through, they've got some of the latest technologies in terms of catalytic reduction systems. So with that kind of a technology, which is both able to increase the performance of a tractor whilst reducing the emissions, I mean, it's groundbreaking, if I can use that term. So it's not only Massey Ferguson. If you look at CAT, the way they've focused on reducing emissions, providing the engines that would then match up to the standards that are being recommended worldwide, it's unbelievable. Hence the belief that our customers have on our products. On top of that, you will see that already there are developments that are in the pipeline of electrical equipment, both on the tractor side and on the earth-moving equipment side, and even on the trucks as well with Scania. Everyone is hands on deck to ensure sustainability. And as Zimplow, we are quite confident that there are solutions on the cards to ensure whichever model that is going to come in the future, we will be there as a distributor of premium equipment products.
Lastly, rebounding in as far as the Zimbabwean agricultural sector is concerned, as well as positives with the strengthening of the prices of commodities, and to a certain extent a bit of a stabilization in terms of the supply of electricity. What's the outlook for Zimplow over the next 2 to 3 years?
We are looking at growth. We are committed to our vision and as well as our strategy to achieve growth in the business organically, and through various ways in which we can implement to achieve that growth, that is probably mergers and acquisitions. So with the developments that have been happening in the economy, the projections for economic growth, for GDP growth, we are quite confident that Zimplow, because of its anchor into the mining infrastructure segment, because of its anchor into the agricultural segment, because obviously for all these things to be moved, you require the logistics, you require the equipment to connect the different production areas to the customers. We are positioned in the right way to achieve that growth. And I'm confident that Zimplow is on that path, and the team that is there at Zimplow, the board, the staff, they are committed and they are buying into the vision. They are seeing the positives so far that we have achieved, and I'm sure by the end of the 3rd year or so, we will be a different business altogether.
Well, good luck with those very endeavors. And once again, thank you for welcoming us into your corporate home. Always a pleasure getting to be in conversation with you, Vimbai.
Thank you very much, Eben, and thank you, Team Equitaxis.
Much appreciated.
Thank you.